Testing. Okay, I think it's working. Oh my God, this is so brutal to do all these things. Checks. All right, hopefully this is working. Yeah, the based on the overall performance of not just my fund, but other funds in the market, it's been a pretty choppy month. Okay, this has been almost the choppiness is probably worse than a market crash in my opinion. Not only is it hard to find big moves in more than 2 or 3 stocks, you know, there's positions that are like kind of misfiring and getting in a little bit late. And I think the overall choppiness based on some of the members' posts is due to the government. So when you go to the after hours channel here, and when you read articles like, not this SEC meme stuff, but Senate Republicans, obviously they're the ones who are, you know, they have the huge influence in the markets, and even talks about a government shutdown, which is good. Government shuts down, market goes higher. That's basically how I've interpreted the market, right? I don't know if anybody really agrees with it, but the government shutdown, we went through that in the last episode with the Republican president, and now we're getting another shutdown with a Democrat president. I mean, they just want 52-week highs, right? So I don't know what to say. I'm Canadian too, so do I really care? No, not really. But based on my experience with the market, every time there's a government shutdown, the market goes higher and a lot higher. So the period of September and August, as they prepare for this government shutdown, has been pretty damn choppy, and not only is it reflected in the all of the accounts that we manage here, but it was reflected in the TGIF ledger, okay, on the onboarding. Look how choppy that month has been, the past month and 2 months. It's been super choppy. And finally we caught a break. Okay. Finally we caught a break on Roku today with decent position size. We went full position. Now the question some people have asked me is like, Roger, I didn't understand what full position means. How do I do this? Is it too late to get in? And I don't know what to do. Like, how can I communicate? How much more transparency do I need to do to get you to understand, like, you know, to get you into the trade? And there's going to be losers, there's going to be winners, and trust me, it was not. You look at this equity curve here from August 12th to now, it was not the most fun. Okay, people canceling, people complaining, your system sucks. You know, what can I say? You're either with me, you're not. Okay, and I know I got the skill sets to do what I need to do, but you know, when the market trades like that, there's a pretty damn tough market. You're gonna get chopped, and if you don't position size, you're probably just break even. But we've position size optimally, okay, and then the onboardings should be now up at 34% in their account. Okay, that is a great performance this week on the TGIF. And as you may know, I'm never ever going to stop trading these TGIFs ever. I'm never ever going to stop. And now we're going to be combining TGIFs with Wolf Waves, even better. It's just amazing that the whole process is becoming a lot more clear, and now we just have to understand. And now most people should, if you stuck with me through August 12th up until now, you actually up 30, 40, 50% year to date. Since October 12th, you've done very well in terms of position sizing, okay, and risk managing. So that's great. And when we take a look at the overall performance, right? I drew, like I taught everybody, draw your Draw all the lines and horizontal lines on your equity curve. Don't draw it on the charts. If you do draw it on the charts, you're drawing it because you want to know like your conditions, your upper boundaries, your lower boundaries, your mid boundaries. Maybe draw a couple of lines, maybe some inverted head and shoulders, whatever. But the main drawing set and tools should be used on the actual equity curve. There's a lot of research on it on Google. You can look it up. But it gets more complicated when you incorporate sell short positions like puts and then calls. I would keep the puts and the calls separate, right? This particular equity curve, which we started back in April, and how many market like craziness have we gone through April till now? Okay, and you can see clearly. I've probably made every single video of these green dots. All those green dots, every single one I've tracked since April. Nothing has changed. Okay, and in between each green dot, definitely you get to see what it feels like when people on Twitter are making millions and millions of dollars, and you're like only making like 500. And how does that feel? And what I'm telling you today is it doesn't matter how much you make. You just have to keep on doing this over and over again like a machine, and then keep on winning and manage risk. Managing risk looks like this on the chart. That's what it looks like, and we are getting ready for hopefully this Roku starts picking up. I mean, I love Roku, and yeah, if we get into a Roku-esque type of move, or we get some compounding action, maybe we go and follow this yellow line here. Okay. As of now, we're following just these trend channels. Okay, and we broke out. We were consolidating, and now we're breaking out. And yeah. Tell me one service out there that's going to make every single recording of every single one of these green dots, record it with position sizing, and it's just a beautiful chart, numerically, quantitatively, and qualitatively. It's beautiful. All right, and let's see if we can make it up to 20,000, maybe 30,000 by the end of the year. Expecting a big move in the markets going into Christmas. Massive move. Okay, so if you're onboarding, I'm pretty sure. Are you up for a podcast? What you think podcast is better? This guy on YouTube? Yeah, I don't want to be another guy on YouTube. I'm pretty content with just doing what I do here, making people money, going out and riding a bike, eating some steak. That YouTube content stuff, and oh man, it's a lot of work. And I don't need to be famous. You know my goal, right? My goal is to go and retire in Thailand and then meet everybody in this Discord community, one by one or in a group. That's all I'm thinking. I mean, there's really not much. I'm not that type of guy personally to do things like, I mean, what would I do when I'm on YouTube? And I don't even like driving that much. And I can't really afford to drive because the risk that I manage is quite high. So actually, when I was thinking about it when I was drinking coffee last night, I was thinking, God damn, I can't drive anymore. Like, it's too dangerous. I need a Tesla. You need a Tesla reverse. You need one, and hopefully you get the one with the most airbags. Okay. I'm not driving. I'm pretty cool with riding a bike, and I mean, I'll drive once in a while, maybe to grab some food. I don't know. I prefer somebody driving me around. But what is this fame? What is that going to really do to my life? It's probably going to make it more busy. I'm a more passive aggressive. Internally, I'm very aggressive. That's just the Korean nature in me. Maybe it's the kimchi. But But yeah, I'm not really too interested in doing all that YouTube stuff. I was thinking about it, but then I realized that it would just be too much work. And trading options is already a lot of work. Okay, so hopefully in theory, if you're following this TGF onboarding stuff, you should be definitely up a lot for the year. If you started in August and you're still with us, then you should definitely be up and pretty happy. And we've got, I think, another, this is trade number 33. Actually I posted to close the $830 calls, all but one, and I looked at my count and it's still open. So you should have closed them off at $4. Now they're at $280. I had to take a phone call, and I realized I didn't click confirm to close the position. So is this a bad thing or is it a good thing? I'm being transparent, right? I officially wanted to close it, but when I typed it in and I closed it, I didn't click the confirm button. I missed it because I'm using this new mouse called the Logitech Ergo, and I missed the button. So it's a reduced position size from 30 to now to 15, but I would have liked to have closed all 14 contracts and just hold on to one. I don't know if this is a good thing or is a bad thing. Maybe Tesla gaps up 4%. That would be super amazing. But we're going to talk about all that today and see what we can do with our current positions. I still have Roku, staggered positions, and the 365 calls that are drawing down pretty hard, long and hard. And I got staggered positions in those. I got still those Googles. Closed off those Amazons. Probably I shouldn't have because the trend was at 0.8. I still got those Microns and I'm going to hold them into earnings because I can afford to hold them. Okay. There's a massive A6 in there. We'll talk about that. I got GPS. Sounds like a GPS positioning satellite device acronym, but it's actually Gap. I don't think I've ever shopped in Gap in my life. Let's talk about all the positions, and I got Apple that draw down almost as much as 40% this morning, which was pretty brutal, but what can I say? October is just around the corner, and we're looking for a massive breakout to the upside in the markets, running all the way to December. Keep in mind, January, the performance from December, the last 2 weeks of December into January, end of month of January 2022, the fund that I'm managing moved up like 30%. Okay, now if we get a crazy Christmas rally with this government shutdown, it could be one of the biggest breakouts year to date. And based on the historical data performance of a Democrat being incumbent in the office, it's just pretty much. I don't think there's going to be ever a market crash. We'll get corrections, but I don't think there's ever going to be a market crash. We'll see. Hopefully not. All right, so I'm going to save this. Take a look at the ledger. Everything that is in that ledger has been marked as onboarding in the trade alerts. Okay, so here's the infamous workspace that I'm trying to get everybody to use in conjunction with my market internal assessment. It's the best we got. We have lots of limitations in the wolf wave, but there's always workarounds. As long as we have this wolf wave, and not to mention we have a new release 1.3 thanks to Reverse or Development Chief. He's taking the initiative to include the bear wolf wave in the script now, so we have best of both worlds. Try to remember the purple D and the yellow D, those Darvis channels. They have those. The purple Ds give you short squeeze potential. Likewise, the wolf waves give you short squeeze potentials when you have a bearish wolf wave setup. So we'll talk about that in a little bit more detail later. Lots of information that you can read about it in the wolf wave channel in the pinned section. Okay, lots of documents that you can read. But yeah, what I want to first do is I'm just going to go through each one of these tickers one by one, and then just see what kind of things pop up. So here's Apple on the 3. Is that a 15? That's a 3 minute, right? Yeah, 3 minute. So 3 minutes got a bearish wolf wave. I'm just gonna go through each one and see if we can maybe create a watch list. Adobe didn't do too well on that 78 minute, but that could be on a watch list. So let me just write it down here. It's a crazy weather here in Vancouver. It was raining and now it's super sunny and it's making me want to burn some calories, but the market's closed, right? I like to burn calories while the markets are burning my premium. Is that funny? Does anybody find that funny? It's not. It's funny when you're making a lot of profit, right? But it's not funny when you're losing money, right? So Adobe, 78 minute wolf wave. I'm just writing it down on my notebook, right? Everyone should just write it down. I mean, I think just based on my experience and all the trial and tribulations that I went through with my trading experience, I think the ledgers with position sizing really does help out. Okay, I'm not lying. You guys all pay money to be here. I share all the information. I have been literally smacked by many PhDs in Korea, smoking, crying, drinking with them. They have trained me to the best of the best. Okay, they're crazy out there in Korea. Some of the rocket scientists I work with, they're hardcore quants, another level. But they always told me to write things down. You gotta write things down, and I really, really hated that. And I always try to find funny, quick things, efficient ways of writing things down, like creating macros or automating things. But in the end, when you get a little older, it seems like manually writing it down is the OG way, and it's a little bit more intimate. But anyways, let's go through this. Adobe had a wolf wave. Let's go through AMD. AMD had a really nice move, but other than that 78 minute T-team squeeze down here, we didn't get any signal. And then the daily wolf wave. Oh wow, the daily AMD has an A6 coming in there. So AMD, we can put AMD as on the watch list. So on the daily market down A6 scanning, that could take out the 52-week highs in October. Okay, let's keep on going down. AMRS is sense offense here. He's probably still sleeping. Amazon's brutal, but thank God I only had one contract. Still has potential to fill those gaps, maybe on Thursday. Okay, why Thursday? Because all the premiums are super cheap. So a nice dump on Wednesday would be very, very welcome. That's what I would like to see. A nice big dump on Wednesday, right into the close. ARK, ARK has been pretty frustrating for a lot of people. I hear a lot of stories. People have a lot of money in the Cathie Wood saga. So, it hasn't been doing anything. But I'm sure she's loading up. Boeing, nothing there. Seems like there's a nice little... we lost money on Boeing. It was obviously that wolf wave. Boeing is a classic example of managing risk, right? So I know there are a lot of people who took that daily wolf wave on Boeing. We talked about it. I didn't take it because I was doing something else. But if you did take it and you have at least 2 contracts, you should at least have one or you're all out. Okay, because look, it went up quite a bit today, and then all of a sudden it gave it all back, and that's why we try to follow the Maximus Aurelius approach in managing risk, because this is crazy, man. It got pretty extended too, so it's pretty straightforward. Look at that magic mic there. on the daily. Let me just pull up this magic mic here. I mean, come on, look at that. You can't get any more like nasty than that. So there's a gap here. It's probably going to fill. Any fill at 222 on that gap would be a buying opportunity. But, you know, you got earnings on October 27th. Maybe you can catch that magic mic and ride it back up to fill that gap at 234. If I had to be a betting man, I would think that would happen. Maybe do a launch pad so it forms a bull flag. So how do I draw a bull flag here with very good precision? So let me just draw it right here. So this is the flag, the pull, and then we get a little flag here like this, and then we go whoop. I don't know, that's horrible. My God, I should go back to elementary school. So that's and there's a gap right here at 233, and obviously a gap at 247 with the daily wolf wave. I don't think the daily wolf wave is showing here on I think I have the latest version here, 1.3. Yep, duplicate. So let's take out one. Redundant. We don't have the wolf wave here showing on the trading view, but so you'd have to resort to the Thinkorswim version. So let me just see quickly if it's still valid. Even on Boeing, no, but we do have a yes, we do. It's still there. Yeah. So catching the Boeing trade off the 6-day moving average, which would be a bull flag on the daily, would be a great trade going into our next TGIF. I'll be thinking about Boeing. I'm going to write it down. Boeing daily wolf wave bull flag TGIF. Something I'll be thinking about on Friday, right? If it moved up 3%, it could move up on Wednesday. We know that Boeing has that that ability to move up Wednesdays. So anywhere where it touches that 6-day moving average, I'll be thinking about Boeing. Okay, so I turn on the algorithm here. Let me just add it. So I don't use the toss option algorithm on this setup because I'm just looking for just waves. So the 6-day moving average. See, the 6-day moving average here is at 216.95, and obviously you don't want to be, it hit the 50-day moving average and did the magic mic, pulled all the way back, and now that 6-day moving average, I think it's what, 215. It moves up only $1 per day. So then it's from 217, it'll go to 218, 219. So picking up Boeing at around 219 on a bull flag formation on Tuesday would be great. I don't think it's going to drop that much. I think it's going to probably trade sideways and move higher on the next TGIF. I don't think it's going to make such a big move this Wednesday. It's probably going to be a bit choppy. We got a A6 scanning on Boeing. So Boeing is looking poised to move higher. The algorithms got in a little bit too late and chopped up, but that's what it is. But eventually, when this starts to trend and go long here, we're definitely going to catch this next massive move on Boeing eventually. Look, the A8's coming back on Boeing. So A8 on Boeing, just like Tesla, means it could squeeze long and hard, and we want to make sure we can catch and hold on to that big move. That's what she said. Big. It's going to be big. When? I do not know, but probably 2022. Zoom and Chewy, yeah. So I'll take a look at Zoom and Chewy. Just let me go through all this stuff first. So nothing. Let me just turn off this. So Boeing's long on the daily, and it definitely can squeeze a lot of profit there to make. But we gotta be careful. Look how dirty that. Ugh. Anyways, moving on. Alibaba. our great mighty old savior Jack Ma. Seems like it's gone up 3.5%. Who knows? It can keep on moving higher. I think there's a daily wolf wave as well. Not being picked up here. BBIG, big baller Instagram. It's up 10.44%. I have no idea what that company does. Baidu, not interested. Like I said, I had a stomach ache with the hot pot last night, so I'm not really looking to get anything like that. BIIB, I have no idea. BKNG sounds like Burger King, but this is a Booking Holdings. It's got a bearish wolf wave on the 78-minute. It's a really big 4-digit stock. I wouldn't really, if you have a small account, definitely do not trade BKNG unless you have a really good setup and you manage risk. Moving on, BNTX. It's just I think these vaccines companies are going to go all to zero, in my personal opinion. Berkshire Hathaway, yeah, it's got some bearish wolf waves. We don't really trade Berkshire on options, so it's not something, I don't even know why I have it there. Bitcoin, like I said, there's a gap at 18,000 and a gap at like 60. Pick your poison, but I have no idea which way it's going to go. But lots of professional Bitcoin analysts are saying 100,000. Okay, let's see what happens. BYND, so fake meat is back again, and we got an A6 on BYND, which could move higher. Let me just take a look on BYND on my other platform here, Thinkorswim, to see if there's any potential trades that we're missing from TradingView. Yeah, it has a weekly. I wonder if this one can show the weekly. No. So, BYD actually has a pretty decent gap here at 119. I think we can catch that on Wednesday for BLT. That's something that problem with BYD, it always gaps up in the morning, right? You have to get in 10 seconds into the close. So BYD daily A6 scanning 119 gap. Probably type it in here too. Set target BYD 119 gap within 14 days. Okay, moving forward, we got Caterpillar. It filled its gap and a couple more gaps above it. So remember, this is the wolf wave with after hours turned on. So we're gonna have to do this again with off. Chewy. Okay, so you wanted Chewy. So Chewy here has that 70-minute. Did you catch that one, Christoph? So I'm not trading this Chewy stuff, but yeah, we'll do Fubo. Remind me at the end. So are you making money on that that Chewy? Not yet. Just started position today. Okay. Right. So I think short-term wise, I'm not really sure, but long-term wise, by before October 19th, it'll fill that 86.41 gap. November, yeah. So more time, better, and I'm not quite sure. I mean, you're gonna get your first move up to $77. That's where you would want to manage some positions. Okay, so whenever the wolf wave reaches that target, you got to do something with the profit. Roger, can you please add AFFI? What's the ticker? AFRM. Okay, so I'll revisit that at the end, since that's the letter A. Yeah, Zoom we'll get to Zoom because Zoom is we're on letter C. So let me just go through this quickly. CMG, nothing. Coinbase, okay, Coinbase has got that wolf wave, so target would be there's no 70-minute TTM squeeze, so the setup quality is mediocre, but 247.72. So set target Coinbase coin to 247, DTE less than 14. Going through the next one, CRM, Salesforce. So you can see there's the move on the 70-minute from last week. That went nuts. Left a gap open at 260, dangerous. It might do a launch pad. So maybe Salesforce could be on the watch list for a launch pad. But in terms of wolf waves, we're hunting for wolves, or we're just hunting right now for wolf waves. I'm just I don't see, we got a bearish wolf wave on the 3-minute for a crowd. Nothing there. DoorDash, nothing there. DDS. Ooh, DDS looks like it's gonna move down to 180 on that bearish wolf wave. So we can type in target, set target. If you're into trading DDS, I have no idea what DDS is, Dillard's. The target is 180 DTE less than 14. Let's keep on going down. DFS, no idea, but BLT on DFS, I don't trade that. Dash does have one on the 4-hour. Okay, Disney. Disney has a gap at 183, but in terms of wolf waves, there's nothing there. Docs, nothing there. Gaps up, above, and below. Dogecoin's under 20 cents. That's not good. DPZ or Z, depending on which country you're from, has a interesting looking wolf wave setup on the 78-minute time frame, but there's no 78-minute TTM squeeze. Okay, so, and you see right here at the bottom, you got the wolf wave setup, right? And then you look at Domino's Pizzas here with the daily candle being red, right? And then all you got to do, like, you don't even need to, you just turn on the Hikinashi candle and you can clearly see the centroid is negative. That means the time and sales for each and every one of those red candles have been biased to the downside. So when you look at this Domino Pizza with no 78-minute TTM squeeze, you're not going to be jumping into that trade, okay, with that type of setup. You want it to have at least a green Hikinashi candle. So that's no bueno. EA, nothing there. S&P futures, nothing. Etsy has an A6 scanning, so it could break out. FANG is just out of control. It's making new rules in the wolf wave. It's pushing way above it. Facebook, it's got some bearish wolf waves. Looks like it's probably going to go down to 340, but I don't know. Pass on that. Fastly did some sort of wolf wave here and it moved up, but it's a $42 stock. I'm not really too interested in trading that stuff. Gold, like I mentioned, do never ever trade gold, please. If you're gonna trade gold, buy it and then just give it as a present or something, but never trade gold. It's brutal. You'll get maybe 1 or 2 winners, but don't try it. Yeah, we're gonna get to Google pretty soon here. Gold, GLD, GME, nothing there. Google. All right, so Google is a position that I have, and we got on this position here on the 78-minute time frame. Okay, we had the wolf wave set up, and we got a 78-minute TTM squeeze. We still have lots of time left, but time is running out, and we have a gap here at 2,867. So the plan here for Google is pretty straightforward because we're still in a TGIF cycle. We did this last week with Roku. We're going to just hold on to it for the first 30 to 60 minutes. And what it should do is it should at least get back above 2,839 within the first 30 minutes. And then with the 70-minute TTM squeeze, it might be able to push all day, like Tesla did, up to this gap fill here at 2,868. So we'll probably be up a little bit on those positions, maybe 100%. We were expecting $17 to $20, but the wolf wave wasn't cooperating today because the market was trading like junk. But the wolf wave for Google is now, from my assessment, has been literally compromised. And that means that the profit potential for Google is now reduced from 2,940 down to, the target would be from 2,940, has been reduced all the way down to maximum 2,868. So close Google at 2,868 by the end of the day. We'll see how the pre-market moves off the 70-minute TTM squeeze. This is still a valid for more upside, but the upside is now limited because the wolf wave has disappeared. So 2,000, let me change the target here. Okay, so there's before, and now I'm going to adjust it to set the target for Google. Target wolf wave compromised. Now target is 2,865 from 2,940. And of course, when you're in positions in Google and you're up 100% midday tomorrow, close off half, depending on the trend. If the trend is still high, if the trend is less than 1, then close half, because you can probably get like a Tesla-esque run like we had today that moves higher into the close. But if the trend hits 1.5, then what's going to happen is Google's going to probably spike hard and fill, maybe break out above this level here at 2,846. We'll probably be in profit once it starts moving toward 2,860, and then you just got to manage probably 80 to 70% and hold a few to the end of the day and close off the rest at 2,867. Off that 78-minute TTM squeeze between cycle 3 and 4, that's when you should be totally out of the position for Google. Okay, I have positions Google, so I'll alert it, but I'm just giving everybody my personal opinion based on my experience with these cycles. Okay, so the wolf wave has been compromised. It's still probably in there, but now we can't really see it, which means that something has changed, right? But we're still in a bullish TGIF cycle, even though the market did kind of take a big dump. And we are still looking to see if Google can push higher into the end of Tuesday, 10:30 a.m. Eastern Time. Depending on the trend, if the trend drops at the open and starts forming that bullish profile again for a power hour rally, then you want to hold at least half of the positions. If the trend spikes to 1.7, 1.5, then you want to close a good chunk of those positions and see what happens at the end of the day. You don't need to have too many contracts to make money in this, make a lot of money. Right? Remember, if you try to recall what happened with Tesla, 2 contracts that went from like $2 to $70,000. We'll do it, just 1 or 2. But here in this case, we just want to manage. We can clearly see something has changed in the pattern, so we need to manage our risk going into Tuesday, 10:30 a.m. Eastern time. You should write them down and try to memorize these things, but otherwise you just wait for the alerts. Okay, going to GPS, we have Gap. So Gap is a position that I have, and I think some people do have some positions. It's flat. Okay, it's not doing the best right now, but the wolf wave is still intact, and unfortunately I cannot see any 70-minute daily squeezes in this chart here, but 2D wise there's nothing, weekly wise there's nothing, monthly wise there's nothing. So it's just kind of coming out. There's a 4-hour TTM squeeze, so that could be enough for it to move up to about $30. But my long-term target, because I do have longer dated contracts in Gap, then I'm gonna hold them almost through earnings. That's give it at least 2 weeks for this thing to move up to around $30. Okay, so we got the November 19th contracts. Those are the ones that you want to be holding. So if you got $27 strikes with me, and the target is $30, $31, then 31 minus 27. Last time if my math is correct, that should be about $4 per contract. Okay, and it looks like a really clean setup, nothing too difficult. But when you reach about 100%, we pick them up around 70 cents, and now you're up at like 150, 140. Close off half and let the rest ride. Okay, right into earnings. I think earnings for GPS is November 18th. So, having a free set of contracts for earnings and seeing what happens, it's pretty good. I mean, could be more than $4, right? Could go up to it's showing 32, so it could be $5. So I don't know. You're gonna have to figure out. I don't know. It's the setup, right? So we're in the setup. Maximus Aurelius approach. Just close off half once you make 100%, and you got a freebie into earnings. All right, Goldman Sachs. I have no idea. Nothing's looking like it's setting up there, but it's definitely got a lot of gaps. And I think once the Dow starts to dump, techs come back. We need Goldman Sachs to dump in order for techs to move up higher. Holy, I don't even know what this company does really, but there's no setup there. Intel, nothing there. Irobot, it's got a bearish wolf wave on a couple of time frames. I haven't traded this stock. Maybe it's because it's like trading at $80, but there's nothing there in terms of a bullish setup on wolf waves. But based on candlestick analysis, it looked like it just came out of a BLT, and then there's an A6 running into earnings. So I wouldn't really be a big shorter bear here, but I don't even trade it that often. ISPC, don't even know what this is. Yeah, I'll get to Micron pretty soon. I'm on. Oh, did I miss Micron? Where am I? I'm almost there. Johnson & Johnson, all I think is about is Band-Aids. No bueno. JNUG, never tried. I gotta delete this JNUG. JPM. Yeah, it seems like financials are moving here, and there's a lot of gaps. Earnings are coming up pretty soon for the financials, October 13th. I guess after October 13th, then the techs start to move. Lockheed Martin, somebody identified a A8 in there, so that's a potential trade that I'm not in. But if the Dow starts to collapse, the gap in Lockheed Martin is going to fill there at 346. Las Vegas Sands, I closed them out made a little bit. Did anybody still have Las Vegas Sands? So I don't. But it does have a daily wolf wave, and I'm out. mRNA. So mRNA took a massive dump today, and it looks like it's going to fill that gap at 264. So not good. Set target. mRNA 264. And I think, I don't know when, but I would say probably during the tech earnings run. Tech earnings run would probably be a problem for these vaccine stocks, because tech is going to be the spot taking is going to take over the spotlight in the market after the financials are done. Goldman Sachs and JPM is done with their earnings, which is October 13th. First earnings run would be for tech would be Netflix, and then when they start to run, Moderna, Novavax, anything COVID related is going to get hit. And there's a gap here at 264. So I might even open up a put on mRNA for the earnings dump on November 10th. That I might just buy just 2 contracts just to see. Let's see what they look like right now. mRNA earnings is, the implied volatility is quite high. It's at 67% for November 5th. So maybe the monthly's November 19th. And it's a 264 target gap fill. That is 262. So yeah, if I can buy 2 contracts at 250 for $1.64, then that could be a good hedge in case the market does crash. I did not pick up Netflix, but the systems did. So mRNA, I'm looking at let me just type in this again, mRNA, set target, mRNA, 264. I'm considering to open the November 19th 250 puts at 1.64. Oh, the Netflix analysis? No, we're on letter M. Can you see the screen? Microsoft. So Microsoft, nothing there. Monster, nothing there. Micron. So Micron, we have Micron. Its earnings are tomorrow. So if you don't want to hold them into earnings, you can close them. If you made enough on Micron, Tesla, then you can hold them into earnings and see what happens. There's an A6 in here, and I think it gaps up and fills that gap at $80. So we can probably catch a lucky break here and make money on those positions. So I'll hold them. Netflix. So Netflix has got this interesting looking bearish wave here. Okay, so actually this is a great example of a contrarian trade. Okay, so why is it a contrarian trade? Is because first of all, it's saying that the target for Netflix, well, first of all, before you even become a contrarian, you have to decide your position in the markets. Like, are you 50-50, you just trade based on the setup and you just follow it and let the numbers speak for themselves? Or are you like, do you have a bias on the markets? Are you generally bullish? Now, in this case, we are generally bullish going into earnings. Sometimes earnings are not bullish, but Netflix seems to have this massive run up, and it has a very good track record of doing well into earnings. Now, we participated in an earnings run in Netflix a couple of times last year, and it was just brutal. But this one seems like it's actually looking like it's running. Okay, and then also 750R, we did mobilize about $1.8 million with Netflix. So there's a lot of people who have Netflix shares. And now this is a great example of a contrarian trade based on seasonality and experience. So experience meaning that if you back tested every Netflix earnings run, more than 50%, which is much better than going to the casino, of the time, Netflix does stage some sort of rally. Now, the magnitude of the rally is not clear. Okay, it's just hindsight results that we are working with. But the average, if you take the average of all the Netflix earnings run, it's around 6%. So if we take this trade right here and run it up to this short stop, see that bearish wolf wave 5, that's the stop loss at 615 with that A6. So now you can clearly see that there's a trade setup running into earnings. And if we turn on the Hikinashi candle, you know, this is a great looking doji on the indecisive doji, where if it opens up a little bit above 589, just kicks above, then it's going to start this first green long and hard candle. And I wouldn't be surprised to see Netflix move up 4%, 3% tomorrow, especially when the TGIF triggered for Netflix. And so we have a double top trade set up using this bearish wolf wave. Okay, nice rounding bottom. It's horrible drawing. That takes it up to 615. Now the question is, do you want to do weeklies or do you want to do contracts for earnings? And this one is, obviously subjective, but that looks great for a contrarian trade for Netflix. Beautiful. Like, see, when they make these, see, obviously it could be like this red doji and then it collapses, but the momentum here is obviously showing a bias to the downside. In this case here, see, it went to the upside, right? And that's because you can't tell where the histogram is. Is it above or below zero? In this case, it is above zero because the past histograms have been showing momentum in a negative trend, but the price has been making higher lows, which is a technical, how do you say, there's something technically wrong, right? They call it a divergence, and this divergent pattern is showing that price and technicals are moving in the opposite direction. So that's a trade that you want to take advantage of. And then, of course, as you may know, everybody knows here that I only trade. I love the 78-minute TTM squeeze with the after hours turned on. So if we take a look at the 70-minute time frame, let's switch this out, and you can see, whoa, there's a crazy looking orange dot, whatever that means. It means that there's the Bollinger Bands are converging and about to break out. Okay, so there's a good chance they left this nice little dirty gap here at 575, tons of gaps all the way down to 520. So I don't think they're going to beat earnings, but I'm pretty sure they're going to run into it and then drop it hard. Okay, so I don't see any. I'm probably going to watch this trade to see if I can get into it tomorrow. Pre-market in Netflix is at 592.45 in the ask, 592.64. Whoa, there's an A6 and a 70-minute TTM squeeze. It's scanning hard. Okay, so that's something that is on the watch list for sure tomorrow, and possibly for earnings run. So if we were to entertain the idea of getting something a lot more conservative, then I would probably pick the October 15th contracts. No, October 22nd. October 22nd. Um, 680 calls for $2.53. That you got the weeklies. Yeah, I don't think we need to go out 25 days. That's just if somebody is like not too comfortable with taking weeklies. But I think October 8th or monthly October 15th contracts could work. I don't see a lot of yeah, I don't think the 70-minute TTM squeeze is gonna I don't know, it's just is there a Darvish channel there? Let's see if we can. Let me just take a look at main server 102. So there's no 30-minute TTM squeeze there, but a 78-minute. Yeah, so I think like here, because Netflix is trading at the UTL, there's a good shot for this to move up to 615 and then double top. That's it. I don't think it's going to continue moving higher. I think we get double top, but there is an A6 in there, so there is a chance, which means that you should, once you get into them, let's say you get into Netflix at 592, and you double, then you should close off half to see if that A6 pushes Netflix up to 620, 630, 640, all the way up into earnings. So this is a staggered worthy position trade that could work off of that A6. So Google has that 30-minute TTM squeeze in there with the 78-minute. So we'll see what happens tomorrow. Let's go through more. NEO. So NEO moved today with Tesla. So it's kind of nice to see. And it's got a gap at $37. Another one at $39. Nike. Ooh, Nike took a big dump. Ah, look at that. It's got a wolf wave right here. Interesting. So, look at that. The wolf wave right there. So the only problem with this wolf wave is that it doesn't have a 78-minute TTM squeeze. So the setup quality is a little bit, you have to kind of match the setup with the wolf wave to kind of have a better appreciation for your risk and reward. Now this one is giving great risk and reward, but at least with the ideal setup, you have your risk and reward contained within those Darvish channels. On the 30-minute time frame, if there's something that's squeezing in the short term, which doesn't look like it is, at least you'll know whether the momentum comes in on that first 30-minute cycle. And if it doesn't, then you're out. So Nike, I don't know why it dumped like this. It said maybe it's probably because of earnings. And I would just keep it on the watch list, but I wouldn't really look to buy this at this point until maybe until the Hikinashi candle turns green. So the Hikinashi candle here for Nike is obviously bearish, and I don't think it's going to be reversing anytime soon, unless unless whatever happens, who knows. But there is a gap, and eventually you will fill that gap. But that I'm not too fond about getting into. Nice gap there, 159. But yeah, you can use this Nike as an entry for long term, say January 2022. You can probably make some money on that gap fill, but it's not going to be like nothing close to what we made on Tesla today. And if you did make money on Tesla, thank you very much for posting your winnings. It's much appreciated. All right, let's go Nikola. I have Nikola was well, it's just gone up, but there's no trade there. Now, it looks like there. I think we did look at Now recently this afternoon. It's pretty bearish, and I'm not really too familiar with this pattern. Nasdaq. Oof. Nasdaq is taking a dump. Novavax, nothing there. Nvidia doesn't look good. It's got double D's to the downside. Obviously, the Heikin-Ashi candle's red. OIH, there's no wolf waves that. Oh, there's one wolf wave here on OKTA. This might be something I might take. Nice 10-minute TTN squeeze. I have no idea what this company does. Let's take a look. Does anybody know what this company does? Cloud. Okay, well that actually looks like a decent trade. Let's take a look at the option chain. So that target is around 255. Okay, that's not a bad trade there for October 8th. Let me type it in there. That's a target is 255. Wolf wave target on the 10-minute and 15-minute time frame. I'm considering the October 8th 255 calls at 1.45. So then I drop it down to this one and then do a little bit more detail analysis on it. So there seems like there's a gap here at 252. It's a gap that didn't fill here at 237. Obviously it took a big hit. Let's turn on the 30-minute time frame. So it looks like more of a mean reversion play up to 252 if the market starts to cooperate, which doesn't look like it's cooperating right now. Still keeps on dropping. It's brutal. Palantir, nothing there. Peloton or Peloton, maybe. PayPal, nothing. QS, nothing. Caribbean, doesn't look so great. A lot of bearish setups on Rocket. Roku's got a green doji, so I think they said somebody had a upgrade that just came out. Is that true? So we'll keep Roku on the watch list, but it's got its doji making a higher low, and they left that gap open at 328. So I wouldn't be surprised to see it taken out on Tuesday. I still have the 365 calls in staggered positions, so I haven't closed them off yet, but I will close the 365s tomorrow at 10:30, before 10:30 a.m. Hopefully the futures picks up by the morning. Starbucks, not much going on there. Left the gap open at 118. Shopify, it's gone A6. Massive move setting up on Shopify. I don't know when it's going to happen, but if it opens up a little higher, then we should be looking for that A6 to take out that 1600 going into earnings. But right now, there's no setup. Algorithms are long Shopify. So I don't really see anything else like that sticks out in terms of wolf waves. Snowflake has a very bearish wolf wave set up down to at least 260, so that could be a potential hedge trade for Snowflake. Does not look good on the A6. But it could be a contrarian trade as well. I just don't have any experience with this setup, this company. It doesn't look like there's any gaps that I can see from here, but this could be a move down to $300. That's the psychological target for that BLT to the downside. And then if it really gets nasty, then it's going to go all the way down to 241. That I do not know. So you maybe open up two contracts, close off one at 100%, and see if the other one goes all the way down to whatever this target is at 240. And probably want to get two weeks out. Space, no idea about that. Spot, there's no wolf waves on spot, a lot of gaps. SPY ETF, nothing there. Square, nothing there. Stamp is gone. It doesn't move anymore. T-Doc. Nope. Didn't look like it's working off that inverted head and shoulders. Target has a wolf wave set up, but there's not much. I think the Hikinashi candle is bearish on the daily. Skills, yeah. Looked at skills. There's nothing there. Actually, there's a 70-minute TTM squeeze, so there is a potential short squeeze that can move up to 12.54. There's a gap there at 12.54 right here. Double top would be at 1373. I don't see it moving up any higher unless there's a gap that I can't see from here. Let's see what else we got. Target, Tilray, nope. TLT, nope. Tesla, we have Tesla. TTD, nope. Twitter, so here's a classic example of Twitter reaching its target, and it's done. So we closed them off last week when it reached right there. So there's no point to holding, right? So that was great. Uber. Uber's gone up on a tear, and they left a nice big gap there at $41. So I'm not really sure how to trade that. That doesn't look like a really great setup. UNH had a wolf wave on the daily, we're out. UPS looks like it's got something there that could be on the watch list, but keep in mind these things move slow. Nice gap fill at 209. I might keep UPS on the watch list. Daily wolf wave. Looks like by Thursday it might reverse and start moving higher. So Thursday, because it's time cycle 1 to the downside, so time cycle 1 to 2, 2 to 3s. 3 is around the reversal time. That's going to be on Wednesday. So Wednesday, maybe we can revisit this UPS, and the target would be at least $200 back to the psychological target into the earnings run October 26th. That could be something that is that I'll put on my watch list. $200 target. UPST, I still don't know exactly what this company does, but it's been on a tear. It would be nice to see if we can catch. Could have caught some wolf waves on that thing, but nope. Visa. Whew. So I think Visa moved up with AXP and now it's pulling back, right? So it's done. Because there's a lot of gaps now. It has to fill underneath it down to 224. VRAR, oh man, there's too many gaps. I should pick this out. I don't know why I have that there. Wish, don't know. Walmart, no. Wow, no. Win actually is starting to pick up again. I don't know if I want to jump in, but if I did jump in, I'll probably jump in when I see a 70-minute TTN squeeze. But it actually did okay. But I don't have positions in this, and there's a gap fill at 98. It looks like it could run up to 100. This might be, there might be an inverse correlation between these casinos and the vaccine. So if the vaccine stocks keep on dumping, there might be a inverse relationship, which may benefit Wynn. Las Vegas Sands. Okay, so that's something to note. And then Zoom. Zoom has a bearish target, wolf wave target. It's been on a massive downtrend, and nice, beautiful gap here at 332. I think they're going to leave that gap open until earnings. I think Zoom is it's been destroyed. So I don't think they're going to fill that gap anytime soon. The gap in Zoom is so big, that's what she said, that it's going to stay open for about until earnings. There has to be some sort of trigger. I think they're waiting for some earnings report to make a decision on whether they're going to put additional capital, if new institutions are going to be adding. But it almost actually makes sense that it's moving lower when we see the vaccine stocks moving lower and the casino stocks moving higher. It's quite interesting, but yeah, I don't want to be bullish on Zoom. So far, as you may know, the onboarding ledger stuff, we've gone through a lot, and we're picking up in profits now. And I'm just going to be sticking to the same thing over again until we get up to 20,000, 30,000, until whatever at the end of the year. That's always been the game plan. Never changed the approach. The whole idea is to stick with the onboarding stuff. If you're new, then you should follow this very closely. But if you do take other trades, make sure you reduce your risk, like I did with Amazon last week, right? So Amazon looked great for those gap fills. TGIF did with one contract, and it didn't work, and it didn't really affect my account. Okay, so you need to know how to manage. Okay, let's take a look at Amazon. So Amazon, you can see with the gap finder, there's tons of gaps. Okay, and then they actually left a gap here at 3,319, which is pretty nasty. In terms of the daily setup on, let me see if I can change this. So on the daily time frame, the algorithm is short on Amazon, with almost like with a head and shoulders pattern. If we turn that off, there's a volume profile here, point of control that it's sitting on. So, and an A6. Whew. Turning on the Hikinashi candle on Amazon, we're not really in a very strong. The time in sales for today on the Amazon was not so great. So we got this red Hikinashi candle. Now, all I can say is that if it opens up higher above 3,400, then the Hikinashi candle will start its trending candle, like a doji green candle, like this, and then it has a chance to move up and fill the gaps all the way up to 3,500. But that is the I think Amazon is going to do pretty much nothing until it starts to make that green Hikinashi candle. Right now, its bears are in control, and if it does not open up higher on in the pre-market, I would just close it out if you have it. But I will get back into it when the market starts to pick up. Well, look at that 78-minute TTM squeeze. So that's what I'm saying. If you do have Amazon and it opens up higher above 3,410, then that thing could squeeze up to 3,547 into the end of Tuesday. That's an ideal setup, and it ended up moving higher. A lot of buyers stepped in, obviously, when you see the centroid here. The centroids are all pretty bullish. So there's a good chance that Amazon could move a lot, but I'm out. I don't have those positions. Missed out on Tesla. So Tesla is just A6 time cycle, still waiting for that time cycle 1 trigger. So we're just kind of holding that right now, reduced positions, okay? And with Tesla, on the daily squeeze there, it's breaking out, and I think we can get one more push higher. Let's see if I can find any gaps. I think there are some gaps that yeah, look at that. Maybe if we get lucky, that's a pretty big move, and probably at least get close to that move. Maybe another 3%. They're saying there's a gap here at 846. So I wouldn't be even. I'm definitely going to open up these Teslas again on the next TGIF. They're saying there's a 7% move, and who knows? Tesla could move 7% this week after that 2.5% move, right? It could be massive. There could be news. That's why there's an A6 in there. So you definitely want to have one contract. But if we don't get that move this week, then guess what we're going to do on Friday? We're going to TGIF Tesla again and again and again and again until it makes a move up to 1,200. We're going to catch that gamma squeeze on Tesla. Tesla's got an A8 there, see? And if this is a wave 1, 2, 3, if this is a wave 3 here, look at that bearish wolf wave on the monthly. Boom. This is like the biggest contrarian trade of the year on Tesla. Okay. Now I'm sharing everything, being 100% transparent about how to use these wolf waves, and everything that I've taught here will soon make sense, because when you're trading in the markets, we know if you scale and consider all the data points as much as you can gather, the markets move up higher most of the time. And then you get these intermittent dips. Okay, market crashes, maybe once every 4 years. So then based on that assumption, if you're thinking more long-term based, then you're obviously bullish most of the time. You should be bullish. You should live life, to the fullest. Be happy, right? Don't be an ass. Just be happy. Be a happy ass. So if that's the case, then when you see these bearish wolf wave setups, these are going to be looked upon as contrarian trades, just like our purple Ds, right? They don't always work, but then when they do work, it's a big squeeze because everyone's thinking that this is a very bearish setup. I totally agree with them because that's a double top, right? The monthly double top here is at 908. So why wouldn't you be bearish on a double top? And I would totally agree that that's going to be a double top and it's going to have probably some problems here pushing through 900 because the next psychological target is 1,000. But if that thing flags and it pushes higher and there's some sort of news that comes in at the same time as the next 78-minute T2 squeeze on the next TGF cycle, then that thing is running up to 1,000 pretty damn fast, and then it's going to stop and form a doji. It might even form a doji at 900. So I don't think it's going to get to 900 this week, but or this month. Well, you never know. How much would it have to move? Well, 12% is nothing for Tesla in 1 week, right? But every TGF cycle, we get around 4% moves on Tesla, okay? And then once in a while, we'll get like a 7 or 10%. Just keep that in mind. Every TGF cycle that we pick, that we trade, especially Roku or Tesla, we're looking for 4% moves, okay? And then there's a probability of around 55, 57, 62% that we're going to get that move. I've always been talking about this since I started this Discord stuff back, I didn't start Discord maybe 3 years ago, but I've been doing this for a long time, TGIFing it. So if that's the case, then 12% move in Tesla means 3 TGF cycles. That's 1 month. So maybe it gets there by the end of October. Sooner the better, obviously. But if we catch if we do these onboarding trades, TGIF this thing on Tesla, and we start compounding now, remember the focus session? So now the focus session is becoming a lot more focused because now we've went through the mental exercise and when we've gone through so many trades together, right? In the battle in the trenches where we're drawing down and everyone's clenching, and we're kind of pulling back up, and that's this is great because we're beating the market. Like the algorithms that are trading this market, it's crazy. It's hard. Even my system is drawing down on the retirement account, but it'll make money eventually, right? It's just the market right now for this month is pretty tough. But what I want to draw your attention to is the compounding plan where we follow this yellow line, okay? And we might start that this week on Friday. So whatever profit you have on your onboarding or your stock in your ledger, you want to either consider either full position size or a little bit more than full position size, using the profits from last week and adding it to your full position size. So the profits, let's say you put in $1,000 last week on Tesla, and then you got an extra 1,000, right? So the next TGIF cycle you do, you're going to put in not 1,000, you're going to put in 1,500, okay? And that should get things moving pretty fast. But we'll wait, right? We're not going to, these are things that we will focus on when the time comes, but TGIF cycle is almost done, right? We got till Tuesday, 10:30 a.m. and it's done. And the big surprise here for Tesla is that it could keep on running all week, right? So that's why we have to have one contract, one or two or whatever. I got like 6, because what happens if it runs up to $900 by the end of this week? Then those contracts, those $800 calls, are going to be worth $100, right? So a $100 contract, and just holding on to one where you just only paid 93 cents for them, which is $90, $100, they ended up becoming worth $10,000. Does everyone understand what I'm talking about? And we just have to let them go worthless. But you should have at least one contract, at least. And when you take a look at this chart on Tesla, you can see that the A6 is still scanning, for crying out loud. How? And you got this nice market facilitation index showing indecision here, right? The volume is quite, the volume here is, I think it's showing that pink histogram because it dipped down a little bit this morning, and the volume is today higher than the previous day volume, showing double B's on Tesla. We got TTM squeezes on Tesla, both on the daily with the length setting for 20 and 14, so it's definitely squeezing. Okay, now the target is the only hard part, because now when we look at our, some of the, we got some more targets here. Look at that. Oh, nice. Look at that. We can even get 821. So we can actually have, does anybody have one contract of the $800 calls? Onboarders don't. Onboarders are totally out. But look at that. If that happens to move, I got the 830 calls. But if that moves up here, just a 4% move on Tesla, which could easily be done. Oh my gosh. What did I just do? Why did I close them out, right? Decisions. But well, you should have at least the 830 calls. Right, at least one. But the 800, I mean, nobody will know if this is going to move up to 820 tomorrow. And if it does, obviously the best chance of it is going to be tomorrow, because it's a TGF cycle. But it could be on Friday. This is a tough decision that no one is going to be able to tell you with a high degree of certainty. Even if you point a gun to my head. I had this Chinese engineer, he's a principal, he hired me. And he talked like crazy. He's like, what if you do this, and what if the client comes in and puts a gun in your head? What are you going to do, Roger? And I said, I'm going to ask him to take the gun away from my head. So, this is, nobody's going to, no matter what, no one's going to be able to tell you with 100% guarantee that this is going to go up to 3.86% to 820 by tomorrow or Wednesday or Thursday or Friday. We've been in the situation before with Roku, where we found that gap at like 434 or something, and it went up 5 days in a row. We could be in that situation with Tesla. So just having one contract is great, because you get to make some pretty crazy money on such a small amount of risk. But to have somebody tell you to hold the full position into the end of the day while the market was dumping like 1.5%, in hindsight, yeah, of course, in hindsight, we should have held on to all those contracts. But I still don't think, other than the trend telling us to hold all our positions into the end of the day, I thought that the market today was pretty damn tricky. I don't know if you agree with it or not. But the trickiness of the market is superseded by your strategy. Because we're actually, in theory, we weren't supposed to close anything until Tuesday at 10:30 a.m. But because of the nature of these option contracts and the theta decay, we have to act and manage our risk. Because if we don't manage our risk, you're going to get caught a couple of times and you might blow up your account. That's the consequences of not managing risk. When you manage risk well, you get rewarded. And right now we're being rewarded for another move up in Tesla, moving up to 820. and if you have those 830 calls, then the 830 calls will probably be worth about $14. No, $10. $10 to $9. Can you believe that? So let's see what happens with this this Tesla thing. It's going to be pretty exciting, but yeah, even when you think about it, like when you got into the trade today and the market was crashing, you know, would you have been able to hold the full position to the very end of the day? And some people could, right? But I still think managing your profits in the long term is a lot better than letting the position run all the way through the end of the day, because Tesla won't do that, won't do this all the time. 1,000% in those Tesla contracts, they don't happen all the time, and if they did happen all the time, how big of the position size would you have had without knowing that it would, in hindsight, obviously I would have held the whole thing. I mean, hindsight is 100%. But when you're not thinking in terms of hindsight, right, then how would you have held all those positions? So the only answer is you got to manage your risk. And if you manage risk well, you get rewarded with profits. And the magnitude of the profits will depend on how many contracts you have, how many contracts you have left that you're willing to let go zero, worthless. Okay, so if you let positions go zero after managing half of that position, that's maximum profit. So let's say you put in $1,000 and you made $2,000 profit. So then you would close everything and hold just $1,000 worth of contracts and let them go to zero. And only in those situations, then that's the time where you make that big money. But when it doesn't work, then you break even, or you're actually up. You'll probably be up, so 200%. Okay, so that's about it. There's nothing really else other than just we'll hang in there and see what happens going into tomorrow. Micron has earnings, so hopefully, with earnings from Micron, if they beat, then that could be really good news for Tesla and all the techs. They could move up even higher, right? So the earnings from Micron will play a significant role in the way that the techs move after Tuesday's close. And I'll see if I want to hold on to those positions, because if Micron moves up 5%, then my positions will be in profit, and then I'll consider just maybe closing all but one contract and then see what happens with that, and maybe to look at managing those Teslas. And let's take a look at Google, take a look at GPS, a lot of positions I have. And then we have a couple of things on the watch list, like Adobe, AMD, BA, BYD, UPS. And I think somebody wanted me to look at AFRM, so let's type that in. And then Fubo. Okay, so AFRM. So with AFRM, it's a little bit difficult for me to I don't see any I just see lots of bull flags, but I don't see a setup that I'm familiar with, so I wouldn't really trade it. But let's take a look at these other ones here. AFRM. There's a gap here at 135, so maybe a little bit more room to the upside, but and a double top here at 147. So you can look for that. It's got a 78-minute TT squeeze ideal trade setup. So it's been bull flagging. See, bull flag after bull flag. So it could actually move up to 150 by tomorrow. Okay, and then looking at Fubo. So you see how I use the Wolf Wave workspace to see if there's any Wolf Wave setup, and then I resort down to the ideal trade setup to see what it looks like on the 78-minute time frame. That is the ideal time frame, right? That I use a lot. Then Fubo. Fubo looks like it has a 78-minute Wolf Wave with a 78-minute T10 squeeze. Risk and reward is very low, so 25.7 to like $27 is not going to make you a millionaire. There is a gap there at $28, so maybe on the daily time frame, yeah, there's a gap, lots of gaps on Fubo, and a big gap all the way down to 0, which is comical. But let's take a look on the Fubo on this Wolf Wave. Yeah, so there's a 70-minute Wolf Wave here. That's the risk and reward is quite limited, and doesn't have the greatest looking daily chart. It's got tons of gaps, and one gap in particular for bulls is at $31. Would I put money into something like this? No. So I'm sticking with the TGIF, where the TGIF runs for onboarding. They're looking much, much better. Hopefully Roku starts picking up, but right now Tesla's in the driver's seat, so we're going to stick with Tesla for now and run it up to $1,200. This is a great sign in Tesla that it's starting to pick up on that wave 5 up to $1,200 target. We're going to trade Tesla for the next 4 weeks and see how much money we can make. This is a really, really good setup on Tesla for a double top at $900. In terms of the other tickers that we do have, obviously my largest position is in Apple, so I will hold on to Apple because we are expecting it to run higher into October. However, if it drops below $1, I will cut them out and just focus on the main position, which is Tesla and the onboarding trades. Okay, so that's about it. Does anybody have any questions before I leave? Okay, well, thank you very much for your time. And if you're new and you joined, the next trade, we have a focus session on Wednesday. All focus sessions are designed to help us understand, the trading environment, trade potential, what we plan to do for the onboarders and all the trades that we take for onboarding, TGIF related. We are looking to make some potential compounding trades into Tesla because we have clearly identified that it looks like it's going to do a double top at 900 and break out to 1,200 on every single TGIF trade. The only problem now is, does Tesla move up every single day into Friday, making a 12% move up to 820, or does it just chillax from tomorrow after 10:30 a.m. into Friday and allow us to pick up some more TGIFs on Friday so we can make another 1,000%, 500% winner again and again and again and again for at least 4 to maybe 6, maybe all the way up into December. We can probably actually, let me take a look at this TGIF here on Roku and see what the winning streak is. Okay, so if we take a look at the performance summary here, it's saying that it's 54.65% that it works out for the bulls, and then the largest winner ever recorded was 5%. So we did catch about 2% last week, 2% this week. So it looks like maybe another one. Maybe you could make a new profit winner here, maybe above 5%. I don't know. We'll see what happens. But it's 5% for every TGIF. Okay, and then the number of maximum winning trades is 9. So let's take a look at the trade list and see if we're on a winning streak right now. No. See, here's the last winning streak: 14%, 4, 2, 1, 1, 0, 4, 3. So that's 1, 2, 3, 4, 5, 6, 7, 8. So 8. This was probably a loser. You know, you can't make money on 0.05%. And you get 3 in a row. And then this one is going to be a winner. So we're in our first winning trend on TGIF for Tesla. That's exciting. Okay, so don't miss out on the next TGIF, because if it every time it makes one winner, it could get nasty, down 8%, 6%. That can happen obviously, but we'll use the setup to help improve our probability of success. Google. So let me click on Google. So update the data set here. So Google's performance on TGIF is around 58%. The largest move is 3.71. So there is a chance, 58.4%, that Google moves up 3.7% on Tuesday. Anytime between Friday and Tuesday. Okay? And the number of winning trades in a row is 8. The largest winning trades in a row is Apple. I think it was 27. Okay, so, these are... Yes, I'm still in Apple. It's a gap here at 146, so hopefully it fills that up. And then good thing I didn't average down on those on Friday, off that TGIF. So as it gets a little extended like this, it's a little bit dangerous with no 30-minute TTM squeeze. Didn't look like I wanted to add more to that yet. Not until October. So October, I'll look to add Apple positions. But let me take a look at the Tesla seasonality again. I should post it into the... Wow, October doesn't look so hot on TGIFs. So that's interesting. But based on momentum wise, we got some thinking to do here. The data is not really supporting TGIFs in October, which could mean that Tesla runs higher all week, this week to the September, and then picks up in December. So October starts to kind of go on a downtrend here. Could pick up, but September seems like its last attempt to make a big move, and then probably consolidate here in October, November, and then pick up in December. So January 2022 contracts for Tesla seems like the way to go. Okay, so thank you very much for your time. We have a focus session on Wednesday, and we'll prepare for again. I'll be on voice tomorrow morning, and then and take it from there. All right. Thank you very much. Have a great day, and enjoy the rest of your evening.